Hello, fellow traders. 'Tis I, the Rumpled One. It is Sunday, June the 10th, the year 2018. Let's talk trading, weekly open and gap. And just to let you know, this is take three. I got a phone call in take one. Take two, the internet kept going in and out. So now we're on take three. So we've got money and risk management to remember to start the week off right. We're in about the third hour of trading here. And as you can see, we're going to look at the monthly levels, previous month's levels. Remember, these are key levels that you might want to look for price action at these 5 levels. Ditto on the week. And you can see here we've got a lot of gaps filled. We still have some nice big ones that are open. Dollar Canadian, pound Canadian, euro Canadian, Canadian yen, Canadian. So something happened with Canada, obviously. I don't know what. And look at that. Pound Canadian. It doesn't really matter. All that matters is how we react to it. And we just hit the 109.50 psychological. Look to go long there. Okay, before I could get it out, there was a 2-3 pip move. Here we go again, that weekly gap filled. And you can see here we don't really have any ranges to say market. We're only in the 4th hour of the market. And there we have it, the buy zone right there, triggered, long, money to be made. No rat zone yet. It's only 25 pips between the high and the low of the day. And on the pivot, as you can see here, here was the open, hit the monthly pivot, hit the daily pivot. Looks like it wants to go to the weekly pivot. And one ball at the bottom, green at the line long, one ball at the top. We need red at the line to go short. Now, if you switch down to maybe M1 or something, you may have taken that short. But beginners, use the H1. Stick with that H1 candle color. You can see here the 5 lines from the previous daily sessions, daily candle. See, 1 bar ago. And you can see here we saw 153 and then it pulled back, hitting the previous day's midpoint. Wick zone, price doesn't like staying in the wick zone. And the holo right here, we've got a new highest open. And we will see if we can trade it heading back the other way. But you see that nice gap there? It filled. I'm glad there's still a couple traders out there who are taking advantage of this. I'm just really glad few people are doing that. And you can see here, I've had the computer on for a while, so you can see on the tick chart, the buying and the selling. The inventory reduction bars. Okay, there was a long trigger here, and that was worth about 5 pips had you taken that trade. And there was a long trigger here, and that was worth about 10 pips had you taken that trade. And then there was a short trigger here. And with this, you really don't have to trade with the candle color at the line per se. You trade with the direction. I like to trade with the candle color at the line. But you can see here that short would have paid off. Probably at an M1 or M5, you could trade that south movement. And you can see here, missed pivots. Last one, 523. I believe it was that one right there. So still need to take out that pivot. And we got some pivots down here. And this is one of my actual trading screens here. So you see this candle shot up. I want to look for price to come all the way back down here. You see that 3 ball right there. There was a trigger. You You can take it at the 52 line. Would have been good for a couple of pips. And you know, I don't even know. Well, this is just the Einstein. I think I'll just leave this chart here. But you can see here, when I turned the computer on, price was here. It broke out here. Could have stayed in that trade. Simple and easy. Just trading from when you start, price is either going to go up or it's going to go down. And you say, okay, so it goes up a couple of pips, I'll take the long. It goes down, I'll take the short. And you just trade using that, nothing more. Just very simple. I use the spread dot indicator to time my entries. So there's really, it's not that difficult. It really isn't. And I've got a couple of more topics for the why you're not getting better at trading this week. So hopefully you've enjoyed that series. I've gotten some feedback. A couple people really do like it. But we'll go back here to the weekly. We can look at some of these. Let's look at this huge gap here on the pound Canadian. I mean, why not take that trade, right? I mean, something happened weird. Just overreaction to the news. Spread, I'm not sure about this pair, but I know this pair. This is just a slight bit premium on the spread. Still can make money. I don't know what this average spread is. The euro gapped up. It's in that wick zone, so you know it either wants to go this way or this way. But we had 1, 2, 3, 4, 5, 6, 7 red weeks followed by this. So now you'd look for a continuation trade, turn trade right here. You've got it. Red followed by a green. Break that high. You go long. Simple trade, simple trade. So you're coming out of the wick zone and you've got that basically a rat reversal or turn trade setup here. Remember, all runs, long runs start with a red followed by a green, just like all long short runs start with a green followed by a red, and you can see it. It always happens. You can come back here, see green, red, down. Green, red, down, right? Green, red, see, it didn't come down, so that didn't start a run there. It basically consolidated, and then right about there or there, you can see in this all these wicks right here, price broke out of those wicks. That's like a bigger wick zone. In fact, I think that's I don't even remember. I believe that's a dynamic wick zone indicator. I think I wrote that last year, 2017 package, maybe 2016. I think it's 2017, but dynamic wick zone. Looking, it'll show you what wick zone price would be breaking out of. So it came here, finally broke out there. You see this one, all of them. You just see price broke out. Because I guess there's some statistics that say price will range for about 70% of the time. So you can see here price ranged, and then it'll break out one way or the other. So you can see here price ranged for what? Oh, call it 1, 2, 3, 4, 5 weeks. So it just pretty much ranged from here to here, and then finally, boom, it broke out. Then it's done all this ranging and came this way. You can see here, it just kind of ranged here, and then it finally broke to the upside. But once again, you see here, red, green, up, red, green, up, red, green, up. So when you're looking to take those long trades, put on a swing trade or whatever you want, trend trade, there's no such thing as a trend. But when you're looking for that, just look, do I have that red followed by a green? Wow, price is going there. Okay, you got green followed by a red. You see it's not making new highs. Oh, it's going this way. Simple little things you can do. You don't even really need indicators. Just look at the chart. You can see. So once again, we've had this breakout. We're going to probably get some consolidation. Is it going to go this way or is it going to go that way? All you have to do is these levels, so then you know which way price is going when it breaks that level. And if it comes back, you can scratch the trade and wait for a do-over. This stuff is not difficult. It really isn't. So if you've been watching those, why you're not getting better at trading, and if you just pick one of those things each day or each week or even each month and just make sure you get better at that one thing. I mean, if you do it each month, that's 12 things you'll be better at by the end of the year. Every week, that's 50 to 52 things you'll be better at the end of the year. You know, I might take a 2-week vacation. I'll give you some time off. I'm not that much of a taskmaster. And if you do it every day, that's what, 250 trading days? It's 250 things you can be better at, possibly. But you got to stack them. You get better at one thing. If you move on to the next, then you got to keep up on that first one, because if you move to the second one and slide on the first one, you're one step forward, one step backward. We're not going to have any of that, right? That's not the plan. So once again, you can just keep things simple. And you see I switched charts here. So now we can look at the Einstein lines. And so you can see price almost broke out, but it didn't. So there wasn't a trigger, because we're not going to rush it. Almost, it's not good enough. Didn't quite happen. So you can see here, you just have to wait. Short at the line, long at the line. Really simple. And we can look at the price action on the euro on my trading chart here. There's a 3-ball. Okay, once again, you see this green wants to come back down. See the red wants to go back up. Not difficult. Not difficult at all. So there's still gaps to be filled. Hopefully you can maybe pick up a few pips trading them. But remember, it's not what you trade, it's how you trade it. So let's go forth and drain the banks.